Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related query. We have our experts waiting by very patiently. We have Kunal Bothra on the technicals, while on the fundamentals today we have G Chokkalingam joining us on the show. And viewers, you can write to us on the number that is flashing on your screen. Do remember to mention the stock that you're looking to invest in along with your name also. And also, if you've bought the stock, mention the buy price, the quantity as well as the time horizon. In that way, our experts will be able to help you better. And talking about our queries then, the first query is coming in from Satyan, who's writing to us from Palakkad, and he has about 100 shares of Wipro, which he's actually purchased at 540 rupees per share. He's been actually holding on to Wipro for a year or so, Mr. Chokkalingam. He wants to know whether he should stay put with it or look to exit or shift to another sector altogether. What's your take coming in on Wipro? 540 is the buy price. The stock is closely, rather steadily trying to move around those levels. Do you think now is the time he should switch or wait with Wipro right now?
Investors should have a presence in IT sector at this juncture. That's my strong faith. In Wipro, you can consider Infosys. I believe Infosys can perform better in the short term as well as in the long term from now onwards.
Coming in from Anu from Gurgaon, and she's saying that she's planning to buy New India Assurance at a price of around 267 for short term. Kunal, what would be your view on this? And also, she has given you a compliment, Kunal. She thinks you're the Rohit Sharma of the stock market.
He was there, by the way, Somit, you know, he was there present with the rest of the Mumbaikars to go ahead and see up close personal, right, Rohit Sharma?
Well, absolutely. It's once in a decade kind of a moment, for us especially and for cricket fans, of course. So you can't miss it, and you should not have missed it.
All right, you should can't miss it, should not miss it. But what should our viewers do with New India Assurance then?
Well, I think it's a classical chart in the making. So I've been tracking this stock over the last few months specifically, and I think at 266, 267, I think I would probably call it as a very good buy because the stock, both this and as well as GIC Insurance, I think both of these stocks, they tend to move in a very similar kind of a price manner, and both of these stocks are showing signs of a breakout and the volumes coming back. So today's volume so far in just a couple of hours of trade today is almost at a high compared to the last, I think, 2 months of price volume for New India Assurance. So I would probably believe that the stock looks attractive. You can look to buy, but maybe keep a time horizon of at least 3 to 4 weeks for the entire trend to play out, because typically what happens is after such kind of a strong price volume candlestick, the stock may get into a mild consolidation before it restarts a strong uptrend.
All right, this next query that I have is coming in from Edwin, who's written to us from Kerala, and he wants to know about Barmalori. He has about 120 shares. He purchased the stock today itself, Mr. Chokkalingam. What's your take coming in on Barmalori? Is this a good counter to stay put with?
I'm sorry, I have a complaints issue because of our personal transactions.
So I'll let you skip
for another week's time.
No problem. I'll let you skip that query. Then Kunal, would you like to take this one? Barmalori, given the fact that viewer has bought it today itself, what sort of a prospect does this one have?
See, it looks attractive. For again, today the stock has given a price volume breakout, ending almost 1 month of consolidation, just around that 50-day moving average was where the stock was trading for the last 1 month. So it's confirmed that breakout. Now there is one hurdle or a resistance at the 316 mark for Barmalori. So I think this is a high the stock had made in the month of May, if I'm not wrong, mid of May. So you may see the stock taking a bit of a pause over there at 316, 317 mark. But the charts are very attractive. So it all depends on what your time frame, your risk appetite as well as your trading horizon is. If you're looking at maybe a short-term play, then 315, 316 could be a good target range. The closer to the stock gets to that range, you can look to book out profits. But if you're in from a medium to long-term play, then I believe about the 315, 316 mark is where the stock would actually start a major medium to long-term uptrend. So it all depends on what your time frame is. Short-term wise, 315 could be a good target.
Well, the next query is from Sheshma, and it's on Ashok Leyland. She has few shares of the company bought at a price of 227. She wants to know whether she continue to hold this counter or exit. Mr. Chokkalingam, what would be your view on Ashok Leyland?
I'm slightly negative on auto companies focused on commercial vehicles. I don't think they are going to improve the sales growth. I would prefer something like Maruti to Ashok Leyland.
This next one is coming in from Veni, who is the senior citizen. Kunal, Veni wants to know whether it makes sense to invest in BSE as well as CDSL right now. If not, then which among these two do you think have the right entry price?
See, I think BSE is going through, earlier both of these stocks, they moved in tandem, where BSE and CDSL, I think both of them, they made new highs for themselves, maybe with a margin of say 1 or 2 weeks in terms of price, levels for each of the stocks. But right now in the last 1 month or 2 months, the trends have been a lot more divergent. BSE on one hand, I think is now challenging or coming closer to challenging its 200-day moving average, I think at 2400 odd levels where it's trading right now. So there could be a possibility that the stock may actually fall below its 200-day moving average and the trends could weaken for the stock from a short-term play. CDSL on the other hand, I think has seen a phenomenal volume jump. The stock is closer to its 52-week high. So I believe that going with the strength is a more important strategy over here. So maybe buying CDSL at current levels could be a better strategy and wait out for the trends to reverse for BSE. That would be a point where you should look to enter.
The next query is from Richie from Andhra Pradesh and it's on HDFC Bank. He wants to know whether it's a right price to buy HDFC Bank for short term. Kunal, how is the HDFC Bank chart looking like? It was on an uptrend, but today it's again down around 4.5%.
Yeah, so I think in these kind of scenarios, the best way to try and wait out for is the point when the stock, sees the first bullish formation for itself, candlestick formation. So in case, for example, over the next couple of days, I would believe that the stock may try to come back to that 1600 mark. So I think assuming if at 1600 levels, the fall gets arrested and you see demand coming back into the stock price, that could be a very good point where you may look to buy. So wait out for those days where there is intraday recovery, for 2 consecutive days for the stock. And if it happens near to a round figure or a psychological mark, say at 1600 levels, that could again be a good reference point.
Now do remember that today's fall in HDFC Bank is on the back of a weak Q1 updates, but there's also one more trigger when it comes to HDFC Bank, and that is the MSCI buying that could come in, but that is still a month away. But given the fact that today's fall is on fundamental basis, let's also get in Mr. Chokkalingam's view when it comes to HDFC Bank. Sir, how are you reading into the Q1 updates for HDFC Bank, and do you expect a recovery or do you expect the share prices to recover from this level?
Certainly, the update is little disappointing because deposits have stagnated, advances have dipped by 0.8% on quarter basis. But the way the market reacted so badly, I am not able to accept it. Definitely, HDFC Bank will continue to show 15 to 18% profit growth year-on-year basis at least for next 3 to 10 years. I have no doubt at all. Because of expansion of branches in semi and rural urban areas, I am extremely bullish on this. And also, the bank has been already punished in terms of valuation multiple. It has already shrunk so badly. Now it is little less than 3 times price to book value. And also, let us not forget the fact that the last split was in 2019. So almost 5 years have gone. And also, there is unlocking possibility of from HDFC, NBFC on. So considering all that, I would strongly suggest that today's call is a great opportunity for medium to long-term investors. Short-term, it may not do well because most of these new investors are chasing the small and mid-cap. They want to make money intraday itself, if not, on hourly basis. So therefore, it might remain little underperforming in the short term, but it's a great stock for medium to long term.
All right, Mr. Chokkalingam, since we have you on the show, we have a couple of viewers who are writing to us wanting to know what are your picks for the medium term. Everyone wants to know 2 to 3 stocks. We have Anuradha who wants to know which is the best holding company that she can buy for a period of 2 to 3 years. What are your views? Which are the stocks that are shining bright? No doubt we've seen a sharp rally in markets. Are there pockets where you can actually go ahead and safely invest right now for a period of 2 to 3 years?
Yeah, certainly, whatever is the market condition, you always get opportunities to invest even in small and mid cap. In fact, most of our coverage still, the majority of the stocks are from small and mid cap. So one stock recently we recommended is TTK Healthcare. It's a 66-year-old company, deep value stock, sitting on cash and cash equivalent of around 800 crore, which is around 40% of the market cap. And it has got male contraceptive product, branded product, and consumer branded products and food branded products, and the delisting failed last year. So I believe that the hidden assets in terms of unlocking potential from the branded businesses and assets so enormous. So this is the one stock for next 2-3 years. And second, Sagar Cement. This is for little risk-taking investors because promoter shares are pledged and it is making losses. But still, I would give neck out and I would recommend strongly, because at current price, enterprise value is just around $50 per ton. It has got more than 10 million ton cement capacity, which is being expanded close to 12 million ton. And also, the renewable energy is going to be 50% of the total requirement very soon. So I am not forecasting, but my intuition is that there is a remote possibility of further consolidation that could improve valuation of Sagar Cement. If all the deals have happened recently at $80, if I assume $80, the stock is worth more than 420 rupees. And third stock I would talk about is Jio Financial. I still believe that in 3 to 4 years the stock can cross 800 rupees. It's trading around 2 times price to book value. I believe in 3 to 4 years it can use the Reliance treasury share to build up its own lending business in a big way, and definitely the stock can get re-rated along with the growth. In 3 to 4 years, it should see 800 rupee target. So these are the 3 stocks. If somebody wants to consider for 2 to 3 years, I believe fundamentals are very strong. One can consider these 3 stocks.
Well, the next query is from Kiran Krishnamurthy from Australia. He wants to know whether it's the right time to purchase around 10,000 shares of Bank of Maharashtra. Kunal, how's the chart looking like for Bank of Maharashtra?
Nothing exciting on the short-term basis. The stock is just dragging, itself over the last 1 or 2 months. It was almost at 72 in the month of May, had dropped down to 63, 64 on the day of, the selling which happened on the elections day. And from there on, the stock had been just about languishing at the 63, 64 mark for itself. So the trends are nothing too major to write about for Bank of Maharashtra. And I think just purely on that aspect, from a short-term basis, it doesn't look attractive. But in case if it comes back to, say, closer to its 200-day moving average, which is at 58 levels for Bank of Maharashtra, that could be a very good point where you may look to initiate a buy.
And Mr. Chokkalingam, what would be your view when it comes to Bank of Maharashtra? Yesterday, the Q1 updates were pretty strong, I believe.
We closed the call successfully. Initially, we recommended at around 17. However, still, if somebody has more than 1-2 year view, definitely it's a hold or even buy, because as I've been saying, it has got attributes similar to HDFC Bank. Only the sizes are different, but still it maintains the qualities of HDFC Bank in terms of asset quality. But in fact, on growth front, of late it started beating even HDFC Bank. So therefore, for long-term investors, yes, it's a buy and hold.
Mr. Chokkalingam, coming right back to you once again. This one is from Vidya, who's writing to us from Bangalore. She wants to know about NetWeb Technologies for the long term, for 3 to 4 years. She wants to know whether she can go ahead and buy this counter, NetWeb Technologies, and the other one is IEX as well. Does it make sense to buy in this counter, and when can she look to buy both of them?
NetWeb, honestly, I have not studied it. IEX, I have studied it. I think the recent rally is a good opportunity to exit IEX because it has lost the monopoly status. BSE started joint venture and NSE also started. It's going to be very difficult. What happened in the telecom, people with a strong balance sheet or with other businesses which are making money, they could kill others entirely through competitive fair forces. So similar thing can happen to IEX. I'm not saying it will be eliminated, but it will definitely will not be a leading player in 3 to 5 years time. So therefore, I may be wrong, but I firmly believe that this is a good time to exit IEX.
It's from Mr. Najib from Doha, Qatar. He has around 1,200 shares of Cochin Shipyard, bought a price of 450, 6,000 shares of RVNL, bought at a price of 150. Kunal, he wants to know the short-term view on both these counters.
Cochin Shipyard as well as RVNL.
Yes, right.
Yeah, I think both these stocks have done exceptionally well. There is no reason why I would probably suggest to book out profits over here completely and look to exit the stock, because the trend is very strong. These stocks have performed very well, and even after a phase of consolidation, mild corrections, these stocks have consistently made a higher high. So unless there is evidence enough where these stocks, for example, break below their 50s and the 100-day moving average significantly, I think you should continue to hold on. And since you have a very good buffer in terms of the entry price for both of these names, I would suggest to stay put.
All right, Kunal, actually coming back to you once again, Girish Iyer has actually purchased 5,000 shares of Aster DM. He bought it actually to get the dividend benefit, but he's saying that the stock is reduced 60 rupees over and above the dividend amount. So he's presently in a loss in Aster DM. He wants to know when can he expect the stock to see an up move, and are the charts actually reflecting an up move in this one?
Well, not really. In fact, the stock has actually now gone way below its 200-day moving average. I think the stock had broken below this level in the month of May, start of the month of May, when it had fallen below the 400 mark. I think 385 or 390 was the level of 200 DM at that point of time for Aster DM. And from there, the stock has dragged another 50 points for itself. And that's one of the major concerns why I generally don't advise buying stocks which are trading below their 200-day moving averages, and that too, stocks which go into a sharp correction below those levels. So I think even at current levels, it looks a bit more difficult for Aster DM to make a very strong comeback. So you may continue to hold on, but again, nothing exciting on the charts.
Okay, may continue to hold on, but if you had to advise, do you think it would be an exit by any chance? And if exit, then which other stock can he look at?
So you may look to exit, but if you're looking to buy, then I would probably suggest two names over here. One of them would be Biocon. That's a chart which is looking attractive. Britannia from the FMCG space is also looking very attractive. So you might consider looking out for both of these names.
Well, that was the view on Aster DM and Britannia from Kunal. With that, let's slip into a short break and we'll address more of your queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of his stock-related queries then. And this next one is coming in from TP Vinod. He's writing to us from Salem. And we spoke about Wipro on the fundamentals, but Kunal, he has Wipro July futures at 545. He's at a loss. What's the view ahead of the results on July 19th?
So, see, there could be a possibility that results and the price action could be at a bit of a divergence. But, I would probably believe that look at this in the last 2 months of price recovery for many of these IT names. Wipro has recovered phenomenally well. I think if I'm not wrong, the stock was almost at 450 or 440 levels just 2 months back, and it's now recovered to almost 530, 540. So there's been a 20% cushion which is already built into the stock price in the last 2 months of price action. There could be a volatility of 5% plus minus into the stock. But then after a 20% recovery into a larger cap name, I would believe eventually the trends start to be a lot more positive. So I'm not sure what the price action could be just around the result scenario. But in case if it dips down to say 500, 510 mark, I would be a buyer for Wipro in terms of recommendations.
The next query is from Shrikant from Hyderabad. He's holding around 100 shares of Vedanta, bought at a price of 320. He's holding these shares since 2022, and he wants to know, Mr. Chokkalingam, what should he do with this counter? Should he continue to hold or book profits and look to invest in some other counter? What would be your view here?
Vedanta is a sell. If you want to focus on large cap, the suitable substitute could be Coal India.
All right, Mr. Chokkalingam, coming back to you once again. This one is from Sagar, and he wants a fundamental view on the insurance space, especially on HDFC Life and ICICI Prudential. He's saying that he's asking if one should actually venture into these insurance stocks for the long-term wealth creation, because technically, if you see, these stocks haven't performed well while everyone had put the biases on these counters, given the fact that post-COVID, these counters will do well, but clearly that hasn't transpired. So does it make sense for one, for wealth creation purpose, look at these counters right now? And do you think that the trend of the diminishing returns for the medium term will continue for these counters?
Definitely, both are not fit to be called wealth creating stocks. In fact, we have a buy call on HDFC Life, but that's again purely from defense perspective. If you want to protect your equity assets, since SMC space is overvalued, one can have from a defense perspective these life insurance companies. But certainly, I don't think they are going to create enormous wealth even a time frame of 2 to 3 years. So if he is looking at wealth creation, then certainly should look at some of the small and mid cap stocks only at the juncture.
The next query is from Sushila, and she has 378 shares of RVNL, bought at a price of 156. Kunal, what would be your view here for RVNL?
So continue to hold on to the stock. You just mentioned earlier that the stock is into a very strong uptrend, and we've seen historically that wherever such kind of uptrends have ensued for RVNL, even if these stocks have met with the corrective phases, post that, these stocks, they have a tendency to make a fresh high. So I think it's a matter of patience. you've been patient enough in terms of RVNL, I would suggest to continue to hold on.
All right, this one is coming in from Ajay from Hyderabad. I'm not sure, Mr. Chokkalingam, if you track this one very closely. GPT Infra is a counter. Ajay wants to know whether it makes sense to go ahead and buy this counter because they've recently announced a bonus share issue. They are looking to raise funds. Keeping all of this in mind, do you think it's advisable to buy this one or give it a skip?
I'm sorry, I have not looked at the balance sheet because for infra companies, analyzing the balance sheet is more important in my view. I haven't looked at the latest balance sheet.
All right, we will skip this one then. Let me take this next query then, and this one is coming in from Vishal. Apologies, Vishal, we've not been able to take your query. He's writing to us from Dubai. He wants to know about Keval Kiran clothing. He's bought it at about 710 rupees per share. Along with that, he also has Borosil Renewables in his portfolio at 623. On the fundamentals, how do these counters look? Does it merit to be in a portfolio for the longer term, Mr. Chokkalingam?
Definitely, Keval Kiran for long term one can hold. In my firm view, Borosil Renewable is extremely stretched in terms of valuation. So I would give sell call on Borosil Renewable, but hold on Keval Kiran.
The next query is from Anjali from Nashik and it's for you, Kunal. She's holding few shares of UPL, bought at a price of 548, and also Arvind bought at a price of 90. Should she continue to hold or book profits?
Continue to hold on to both of them. UPL as well as Arvind, both of these stocks have come back above their key resistance points. And I think when we look at the volumes patterns also, they've been a lot more stable for these stocks other than the previous downtrend, and especially for a stock like UPL, which has actually been going into a major downtrend since the last 1 to 2 years or more. So I believe both these stocks are showing signs of a very good strength. You can continue to hold on.
All right, this one is coming from Anusha, who's writing to us from Karnataka. She wants to know about Castrol India. 190 rupees per share is a buy price. Mr. Chokkalingam, she's asking whether she should go ahead and book profits in Castrol India or stay put with this for the medium term. What's your take on this counter? Because it's seen a very sharp rise over the last few trading sessions alone.
I firmly believe that it's a good sell at this price for two reasons. One, this lubricant industry is going to be, end of the product life cycle because of the evolution of electric vehicles. And secondly, in the last 5 to 10 years, the competition in the lubricant business has got intensified like anything. So considering all that and seeing the recent rally, I firmly believe that it's a good sell at this price.
Query is from Radha from Bangalore. She has around 90 shares of Bharti Airtel, bought at a price of 1,454. Kunal, should she continue to hold or sell this counter?
I think continue to hold on. I'm assuming that you are looking at this as a longer term play because Bharti Airtel is a kind of stock which would do pretty well for itself when you look at this from 1 year, 3 year, 5 year kind of a time horizon. But if you look at it from a say 3 month, 6 month time horizon, it would test a lot of patience, for you in terms of holding, because the stock has this tendency of going into a very lull kind of a price action even if the markets are buoyant, and many a times we've seen that the stock goes sideways when the markets are also going through a corrective phase. So I think in both of the scenarios the stock may look to be a bit more sideways on a short term time scale, but if you're a long term investor, then looking at the last 3 years and 5 years of chart history, I would believe that the prospect over the next 3 to 5 years is also a lot more positive.
Kunal, coming once again to you, DB Thakur is writing to us from Ahmedabad. He has 100 shares of LIC Housing at a price of around 750 rupees per share. He wants to know whether he should add some more of this in his portfolio or look to stay put or exit.
I think it's an exceptional chart because I've looked at LIC Housing very closely over the last few months, especially when the stock started to rally from 430, 440 levels. And my indication was that the stock would probably come back to the breakout of the previous high. I think it's coming very close to, or if I'm not wrong, it's already broken past about the previous highs of 795, 800 approximately. It's an exceptional chart. The last 3-4 months of volumes are still on the dismal side for LIC Housing, which means that the major part of the volume participation could start off in the next couple of months for the stock. So looks quite strong, and looking at the last 3 to 4 months of chart history, I would suggest to hold on.
Well, the next query is from Alok Mangla from Delhi, and he has around 524 shares of Granules India, bought at a price of 427, 568 shares of Excite, bought at a price of 525. Mr. Chokkalingam, what would be your view on both these counters, Granules India and Excite Industries?
Granules India one can hold. I firmly believe that Excite Industry has played out a little beyond what valuation would deserve the price.
This one is coming from Kumar, who's writing to us from Mysore, who has 80 shares of Sheela Foam, Kunal, at a price of around 1,213 rupees per share. He wants to know whether he should stay put with this or go ahead and book loss.
No, I would suggest, in fact, the third option, which is to try and average out further at current levels, because the good part about the stock is it's coming back into a recovery mode. Volumes in the last 1 month, and there have been 2 or 3 big candles of volume activity for Sheela Foam, and when you look at this in the last 3 months of price action, the stock has bottomed out at 850, 870 mark, and now almost at 1020 levels, again coming in line to break past about the 200-day moving average. So when you look at this in terms of volumes, the price stability, the tendency of the stock to come closer to this long-term moving average, all of that indicates that this trend should sustain for Sheela Foam. I would say this to average out.
The next query is from Thomas George from Cochin. He has around 200 shares of Thomas Cook, bought at a price of 130. Mr. Chokkalingam, what should he do? Should he buy more of this counter, sell or hold Thomas Cook?
Sell.
All right. That was a very quick answer. For a second, I thought we've hit a fatafat. But Mr. Chokkalingam, you gave your view on the defense counters in the start of the show, and we have a lot of our viewers who are writing to us stating that they are sitting with hefty profits. Luckily, in the defense pack, we have Renuka from Kerala, who has 50% profit in Cochin Shipyard as well as in HAL. What's your take now for all these defense counters, be it Cochin Shipyard, HAL, BEML, which has hit a record high level as well today? What should one do? Book out profits right now?
I'll take only 1 minute extra. After seeing this market closely for 33 years, I have been all through my life focused only on small and mid cap. But honestly, person like me has become a joker in the last 2 months. So if you take my view seriously, you might lose further momentum. According to me, there is no valuation comfort in any of these stocks. But again, I want to say that I might continue to go wrong. But one thing you have to decide what kind of profit you are making. Accordingly, one should sell in at least in phases, because today's market cap is 448 lakh crore. Again, I'm telling you that even in 1% of that selling 1% of that comes up for selling, our market doesn't have appetite to absorb without eroding the small and mid cap space in a big way. That's what happened consistently in the last 30 years. So finally, my comment is that try to take profit, if not in one shot, at least phase it out and try to take profit and convert into some fixed deposits or buy some own house.
All right, so that's the fundamental view coming in from Mr. Chokkalingam, being very candid about, given the fact that he has about 3 decades of experience in the markets. Kunal, if you look at these defense counters, the valuations look stretched. Look at the relentless rally that all of these counters have seen, right, over the last 1.5 years or so. What's your take on the technicals? What's your view coming in on all of these defense plays, which actually our viewers hopefully are making really good profits?
See, I would believe that, I think most of the points which, Mr. Chokkalingam mentioned, I think is true to the fact. But there are 2 factors which I typically look out for. If there is a fundamental story which is attached towards a certain sector or a stock specific. And then the second and the most important part is what we look out for is sticking to the more formidable names into each of the sector. Now, to give an example, Bajaj Finance in 2009 was a stock which at adjusted value was almost at 5 rupees or 6 rupees. In a matter of 4 years, the stock went to 30x, almost 150 mark. So it may have looked a lot more overbought at that point of time. But remember, from 2013, if your time horizon was another 10 years, then the stock has multiplied by another 50 times. So it all depends on the kind of quality which you are looking out for. I would not paint all the stocks with the same brush, but if you're sticking to quality, even if it's a defensive pack, then I would, and with a long-term time horizon, then I think money should be made further for long-term investors.
Well, the next view is from Sudeep from Mumbai. He wants to know whether Camlin Fine Science or Kingfa is a good buy. He wants to make this investment for the next 3 years. So, Mr. Chokkalingam, have you looked at both the counters, Camlin Fine Sciences or Kingfa?
Camlin Fine Science, yes, other stock I have not gone through. Camlin Fine Science one can hold. After the recent correction, it looks little attractive.
And any other view on Kingfa?
I haven't studied it, I'm sorry.
Well, that was Mr. Chokkalingam's view on Camlin Fine Sciences. With that, let's slip into a short break and we'll address more of your queries post that.
In this episode, we bring to you the unveiling of a specially curated white paper and what insights it has to offer this weekend at these times, only on Times Network. Associate Partner, Adani. Green State Partner, Energy Department, Government of Karnataka. Education Partner, Bennett University.
चलो देखते हैं दिशा सुपर क्यों है।
क्या देख रहे हो? मेरा पोर्टफोलियो? पर मेरे पोर्टफोलियो पे सिर्फ मेरी नजर है।
दिशा का एंजल वन सुपर ऐप बनाता है उसे सुपर। इन्वेस्टमेंट्स इन सिक्योरिटीज मार्केट आर सब्जेक्ट टू मार्केट रिस्क्स। प्लीज रीड ऑल द रिलेटेड डॉक्यूमेंट्स केयरफुली बिफोर इन्वेस्टिंग।
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And for all of our viewers, just a quick note, if because a lot of them are asking us for Mr. Chokkalingam stock pick. We've already taken that query, and you can catch that on YouTube after the show is done. We'll be posting the link on YouTube, so you can catch what his recommendations were on 3 best stocks that you can look at right now. But Kunal, coming to you, Shriram Finance, Swati wants to know that what is the right entry price for Shriram Finance now?
So I think the stock has again done pretty well for itself over the last 1 to 2 months. It's come back towards 2800 mark, which is the key short-term moving average. I think the 20-day moving average for Shriram Finance at current levels. So you may look to buy say closer to a 2775 levels for Shriram Finance if you're a short-term investor, and then look out for targets in the range of 3000 for the stock.
Well, the next query is from Krishna Kumar. He's holding around 4,000 units of Power Grid InvIT bought at a price of 96. The InvIT gives a dividend of around 12%. Mr. Chokkalingam, have you had time to look into the Power Grid InvIT?
Yeah, definitely considering the dividend yield, also the recent price correction, you can hold on to Power Grid.
All right, Mr. Chokkalingam, coming back to you. This one is coming from Chris. She wants to know about JB Chemicals. He's saying that he's benefited quite a bit. You had recommended the stock a long time ago, and he's actually been able to benefit from there. But he's saying that since most of the stocks are already richly valued, can he look at ONGC, Godfrey Phillips, or for the matter of fact, Ultratech Cement right now?
Having made such a phenomenal wealth, now he's talking about a very defensive stock in large cap space. Yes, definitely these stocks worth buying considering the current market structure. But if he is again looking for a wealth creation, he can definitely consider stocks like which I mentioned already, Jio Financial. One more stock I would like to add to your viewers, which is Sterling Tools. I believe that in the next 3 to 5 years, Sterling Tools can create substantial wealth. Its 100% subsidiary is engaged in a component for electric vehicles. And I have studied, the balance sheet, the business model. This one stock gives me enormous confidence to me for wealth creation in a matter of 2 to 3 years.
The next query is from Saranya from Chennai. She's holding 500 shares of Ujjivan Small Finance Bank, bought at a price of 52. Kunal, should she continue to hold this counter or sell?
So you can continue to hold on, but I would not suggest an add on the stock because of the way the stock has trended in the last 4-5 months. It's fallen from 60 levels to now 44. It's in line of breaking below a major support around the 40 mark. So if possible, then keep a stop loss. Your stop loss should have actually been in place some time back. But I think if the stock breaks below the 40 levels, it could invite further selling over a medium to long term. So keep a stop loss in the trade, but don't look to add further.
All right, this one is coming from Sridhar, who's writing to us from Coimbatore. Kunal, PNB Housing Finance is a counter. He has about 750 shares at a price of 795 rupees per share. Should he stay put with this one or look to exit?
So you can continue to hold on. There is a minor resistance gap, for PNB Housing Finance. I think the range is around 817 to 835 on the spot level. So if the stock crosses about the 835 mark, that's where I believe that the second round of momentum could start back again on the upside for PNB Housing. So it looks attractive, but 835 could be a breakout point, so wait out for that.
Okay, the next query is from Narsimha from Hyderabad. He has purchased Narayana Rudhalaya at a price of 1,000 rupees. He wants to know whether should he continue to hold this counter. Also, he has IGL in his portfolio and Rainbow Children. So, Mr. Chokkalingam, your view on Narayana Rudhalaya, Indraprastha Gas and Rainbow Children?
Narayana Hrudhalaya you can hold. I am not that confident on other two stocks. Of course, IGL, Indraprastha Gas also you can hold. Third stock, that Rainbow, I have looked at it. I find it valuation stretched. So first two you can continue to hold.
All right, with that, let's kick start with taking all of his stock-related queries in the rapid fire then. And this one is coming from Shaswati, who already has Berger Paints in the portfolio. Mr. Chokkalingam, the buy price for Berger Paints is 630 rupees per share. Should continue to hold or look to exit?
Exit, because oil price is continuously rising.
The next query is from Sudha from Mumbai. She has 100 shares of Aarti Industries bought at a price of 710. Kunal, should she hold or sell?
Continue to hold.
Kunal, this is Bhuvaneshwari on RK Forgings. The buy price is 878 rupees per share. Continue to add or look to add some more at these levels?
Just continue to hold on to the stock as of now.
Next query is from NP Chauhan. He has around 100 shares of SAIL bought at a price of 95. BP SAIL 100 shares bought at a price of 395. Mr. Chokkalingam, should he continue to hold both the counters, SAIL and BP SAIL, or sell?
Sell SAIL and hold BPCL.
Mr. Chokkalingam, Chandrasekhar wants to know, given the fact that you have iron ore prices fluctuating, is it the right time to buy NMDC?
No.
The next query is from Vishwanath Nair from Cochin, and he wants to know, Kunal, whether should he enter these three counters, Indegene, Suntech Realty and VLS.
So I think Suntech Realty could be a better bet out of the three.
All right, Mr. Chokkalingam, we have Pankaj is holding IDBI Bank from the levels of about 91 rupees per share. What should his strategy be in this one?
Hold.
The next query is from Swati, and it's for you, Kunal. She wants to know two out of these three stocks where she should invest: Indiabulls Housing, Indiabulls Real Estate, or Deepak Fertilizer.
Indiabulls Real Estate.
Kunal, we have Leon who has Greaves Cotton in the portfolio about at 164 rupees per share. What's your view coming in for Greaves Cotton? What should he do?
Hold on to the stock, but I would suggest it will go into a mild correction closer to 155.
The next query is from RS Mundla, and he wants to know whether should he invest in Sterlite Tech. Mr. Chokkalingam, what would be your view?
Somehow I'm not convinced about Sterlite Tech.
All right, once again, Mr. Chokkalingam, Moil, do you think this is a good stock to buy for the long term? Mayank Shah is asking.
I had a buy call for more than 12 years. It's a good sell now.
Okay, it's a good sell now, and that is with that we come to the end of the rapid fire. Thank you so much, Mr. Chokkalingam, as well as Kunal for joining us. Thank you, Kunal, for the BNSN Pathshala, as well as Mr. Chokkalingam, especially for your take coming in the defense counters. But with that, we are totally out of time with this edition of Buy Now Sell Now. It's a goodbye from Somit, myself, and the team who put the show together for the entire week. It is Shreyansi as well as Somashri, who are our producers, and our director Santosh. Thank you so much for watching this week. We'll see you next week.